The Todd Shapiro Show.
Time to hit the button!
On Canada Talks, SiriusXM 167. Stock Jocks with Genevieve Roch-Decter.
One of my favorite ways to start the week is doing this segment each and every Monday with the Genevieve Roch-Decter at Grit Capital on Instagram. Go and follow their incredible stories and their posts. Keeping finance fun, incessantly chasing ROI. That's return on investment, even I know that one. How you doing, Jen?
I'm awesome. I'm 2 weeks into my staycation here in Toronto. As you know, I'm on the road quite a bit. So it's been good. I operate kind of either I'm hustling, bustling, and on the road, or I'm at home ordering Uber Eats 3 times a day. So
it's funny, we were talking about that earlier. You got to be careful where you get your Uber Eats from, but that's another story. Genevieve Roch-Decter. I wouldn't call it a staycation, though. I don't know. I don't think I know anyone who works as hard as you do.
Yeah, true. But I guess the not having to get on an airplane 3 times a day for me is like a staycation.
Yeah, fair enough. Hustling away. Why don't we get right into it? Because we usually cover the stuff before all the small talk. And what Genevieve Roch-Decter does is makes finance fun. She makes it fun for all the Grit Capital followers and, of course, all the Grit Capital clients. And make sure you go and check them out at Grit Capital on Instagram. And for the Shapiro Show listeners, we do this regular feature every week where we start off with the hot stock sector of the week.
Hot Stock Sector of the Week.
All right. Sizzling hot IPO that happened on Friday. Tech IPO, Lightspeed, LSPD. They went public Friday, raised $240 million, and it was the biggest tech IPO in Canada in over 9 years. So investors are very sizzled up and jazzed up about this one. They bought up the stock on Friday and again today, and it's up 20% from the IPO price of $16. And I did some digging. I actually read the entire prospectus because I'm such a nerd. And I found out 3 really interesting things. So U.S. investors actually were half of the IPO. So they actually invested quite a bit of money, which is impressive because usually the U.S. investors are kind of they kind of put their nose up at Canadian tech stories because they think they're kind of, Silicon Valley and kind of the kings of that. So I was impressed by that. Secondly, the multiple on the IPO was really high. It was 20 times revenue or almost 20 times revenue. So that's a pretty high multiple. And the company is it's still losing money. So it's not profitable yet. So I thought that was interesting. And then the other thing is, so a lot of people would know Shopify, right? Shopify went public in 2015, and that was a hugely successful IPO. It was $17 in 2015 when they went public, and it's over $274 today. So this Lightspeed has a lot of commonalities to Shopify, but it's a bit different. But investors love to invest in things that made them money in the past, right? So if it walks like a duck and talks like a duck, it might just be a really wealthy duck.
Can you tell us real briefly what Lightspeed does?
So they help companies manage sort of their back office and logistics and all that, and their point of sale. So basically for payments. But so Shopify does a lot of that, but Shopify does it for online stores. Lightspeed is doing it for traditional brick and mortar stores. So small and mid-sized enterprises.
And one of the things you've really helped our listeners understand was the sort of where companies go IPO and there's early money before that would have been raised, and that there might be immediate trading with shares, which could cause a dump and maybe you could buy. In this case, do we know if there was immediate trading for some of those IPO raised shares in the private placement deals, or how did that work that it's gone up 26%?
Yeah, I didn't actually specifically look into that. I did see, though, if you Google the company, there's a few websites that list the private financing rounds that happened before. I just didn't dig into it too much. But I do know the CEO, he crystallized a pretty big chunk. He owns 16 million voting shares, which are worth over $250 million today. So
good for the CEO. I mean, the company's been around since 2005. That's one thing I know about it. So I kind of like these stories where, I mean, granted, it's still losing money, but it's not just a flash in the pan that's going public to go public. This is obviously a company that's put in its hard work before they went public.
Yeah, no, for sure. And also goes to show that you can build up a big company privately in Canada, and there is funding available, and you can wait till the right time till you're big enough, like a tech unicorn. It's over $1 billion market cap. It's actually $1.8 billion before you go public. You don't need to go public right away if you don't need to.
One of the questions, Genevieve Roch-Decter, before we move on with our little stingers here, that actually a comedian friend asked of ours on the show last week, his name's Abdul Butt, and he follows finance quite closely as well, is how a lot of these tech companies can continue to lose money but go public and gain value in share price. And is that sort of a confliction of one another? And does that surprise people? And why is that? Is that about the potential, or is that just about people owning a piece of a company that they really want to truly be involved in?
Well, yeah, Lightspeed's a good example. So 90% of their revenue, so even though they're losing money, 90% of their revenue is reoccurring, meaning the customers are on some sort of reoccurring contract, and that gives investors a lot of comfort that even though the company right now is losing money because they're probably just reinvesting in the business for growth, in the future, once they're through all that kind of what you call capital expenditure, the company will be profitable. So investors can kind of see the light of day down the tunnel, if you will.
Do you ever worry about the Netflix model where it's sort of the same, a lot of recurring revenue, but a lot of cost goes into the infrastructure and all the production of obviously great content to the point where they're losing money as well? Do you worry about that model at all?
Well, I always look for a moat, right? A moat is basically kind of, you have a fence around a business model that people can't copy, or competition is very unlikely. Netflix, it changed its business model a number of times, and now it's kind of, I don't want to use the word too big to fail because that's really has some negative connotations, but they own like a pretty big chunk of the viewers out there. Look at Amazon. Amazon lost money for a very, very long time, and it was, I think, the second company to ever hit trillion market cap in the world. So it's not always about the bottom line. If you have a moat and you have the growth and you're one of the top players in the industry, I think you can continue to lose money and still have your shares go up.
Absolutely love this stuff. Let's move on to the worst trade of the week.
The worst trade of the week.
All right, last week, Weight Watchers. Weight Watchers was down 11%, and it's down over 70% in the last 6 months. So last week they came out with a profit warning saying that going forward, they think their EPS could be down as much as 50% this year. As people know, Oprah owns a lot of this company. I think she owns about 8%, so she's a major shareholder, and they're trying to pull her back in to do more marketing for them because they're in trouble right now. The other thing is I found very interesting, and this is kind of a new thing now when we're going to be reporting these, trades of the day or trades of the week. I want to always have like a lesson learned. And so my lesson learned with this one is seasonality. So about 40% of Weight Watchers subscribers join during the first quarter of the year. So the first quarter of the year is January, February, March. And so they came out with this profit warning because they obviously saw that in January, February, their subscribers were down or not as much as they were last year. And this is very similar to kind of, everybody wants a gym membership, start off the New Year's with a resolution. And I guess it's the same for Weight Watchers. So seasonality, that's a big thing in the mining industry and the energy patch as well.
Genevieve Roch-Decter joins us. I often wonder too if that's just a product of a lot more healthier living across the board, where there's people are just more health conscious in terms of the foods they eat, in terms of the way they do take care of themselves, in terms of companies mandating gym memberships and time dedicated towards taking care of yourself, where less people, and I'm hoping less people have to lose weight, because we do know that it's proven that it could lead to a lot of things like diabetes and heart disease and stuff. So perhaps people are actually just taking better care of themselves. I don't know.
Yeah, and I think also the invention of Uber and all of these, like DoorDash, all of these very convenient options, that are fast food in the fact that they come fast to your house, but a lot of healthy options as well. Like I will be eating Freshie for dinner tonight.
That's a very good point. Well, the Weight Watchers one is very interesting. I will tell you, for the worst trade of the week, always good to trim off the weight from yourself, but you never want to trim off the value of your stock. That's for sure. Let's move on to the finance term of the week.
Finance term of the week.
Over allotment option. that's a big word. Actually, this goes back to your question about Lightspeed and potential stock coming loose on the IPO. An over-allotment option is when the investment bankers essentially give themselves a potential bonus. So they're able to potentially buy stock. So in the case of Lightspeed, it went public at $16 a share, and the investment bankers are able to buy in this offering up to 2.25 million shares at $16 if they choose. So if the stock goes up like it has, it's gone up to $20. They could take that difference between the $20, sell their stock, and the $16. So that's a $4 difference times 2.25 million shares. That's another $9 million to the consortium of investment bankers that took this company public. So that could actually, and I'm not specifically saying in this case.
Instance.
Oh my God. It could cause pressure on the stock or on any stock when there's an over-allotment and the stock does well out of the gate.
And is that something only insiders have the opportunity to benefit from?
Well, just the investment bankers. So in this case, BMO, National Bank, JP Morgan, these are the investment bankers that took this company public.
And is that something that the regular investor should be investigating, what the over-allotment number is, which could drive down a share price potentially if they sort of hammer this? So and by the way, and how long do they have to enact this clause, or so to speak?
It's different in every instance, and the thing is like they say they manage it, right? So they have this stock, and they don't want the IPO to trade down, so they kind of manage it. They sell it over time. But in some cases, they do take money off the table, and it can cause some temporary pressure on the stock.
Is it different than a warrant, though?
It's not that different, to be honest, because it's an option value. It's like if this stock trades up, we could make more money, which is similar to a warrant, except I don't think it expires.
That's what I was going to ask. Okay.
Don't quote me on this one, but I don't think it does.
I like that we stopped Genevieve Roch-Decter. We're going to have to find out for next week for sure. It's like the old show Win Ben Stein's Money, and they would have Jimmy Kimmel would be at the end of it, and he would kind of reconcile what Ben Stein screwed up. Well, I'm not saying you're screwing up stuff, but it's fun finally to get you on something, Genevieve. Let's move on to the stat of the week.
Stat of the week.
So 10 years ago, the S&P 500 bottomed out. So it hit a low of 676, and it's gone up 309% since then. And it has been the longest bull market in a long time. And another interesting fact just out of this is that there's more families owning stocks, households owning stocks than ever before. About 51% of U.S. households now own equities, which is interesting. That's gone up over this whole bull market. Do you?
Now I can't speak. Is part of the reason and stuff that I've always talked about, at least to my listener base, is that people are taking sort of a little bit more control of their own wealth with things like Questrade and things like that.
Like the discount trading and maybe the advent of the ETFs too, because the ETFs are a very cheap way for people to own equities. And so back, 10 years ago, there weren't really ETFs. It was mutual funds, and mutual funds were pretty expensive. They cost you anywhere from 50 basis points to 2% a year, and ETFs can cost as low as, I think the TSX ETF is at like 0.05%. So basically almost free.
You've been doing this for quite some time, and of course, Grit Capital getting a lot of recognition, especially on the Instagram, and not only just with your clients, but with everyday investors and some new investors. Do you get a lot of people kind of hounding you now and asking for advice? And hey, AGRD, what's a good stock? What's a good stock? And I find that's happening to me, but I find that's happened to a lot of people. And if it happens to you, what is do you have a standard templated response?
Well, yeah. I mean, I'm not a financial advisor. I was one before. I was as a portfolio manager, but I say I can't give financial advice. You can take a look at the companies that we support and we do investor relations for, and obviously that's a good indication of what we like. But also, I even when I was able to give financial advice, I used to say this. If somebody asks you for a stock tip, okay, and you give them one and it doesn't work out, you're never going to hear the end of it. But if you give them a stock tip and it does work out, you're still not going to hear the end of it because that person's going to be coming after you all the time. So it's kind of a lose-lose situation.
And the other thing, too, when you say tip, you mean stuff that could be found if someone doesn't want to go and search for it. It's not like nothing insider here. Yeah.
No insider trading.
Yeah.
I just meant like a stock idea.
Yeah.
Like,
No, I just wanted to clarify. That's my finance term of the week. I just wanted to make sure that people knew the difference. Well, let's move on to the things that Genevieve Roch-Decter hates about finance, or finance to hate.
Finance to hate.
So compliance is the thing that bothers me the most, specifically when it pertains to research reports. So research reports that the investment banks put out now have sometimes 10 pages of disclaimers before you actually get to the meat of the company. And these disclaimers are just year after year, they add another page. And I find it's very bad for the environment that every research report has 10 pages of the same bullshit that no one understands. And I came up with an idea. So, when you're trying to log in online and you need to put your password, and then they sometimes ask you, like, how many signs, like they want to check you're not a robot. They're like, how many kind of crosswalks?
Oh, traffic lights. How many crosswalks? Yes. I hate that. I always get them wrong. I always miss the one traffic light in the bottom right. I always miss that one. But anyway, sorry.
Yeah, they're actually kind of hard, right? But you have to kind of wake up and you have to kind of wake up and do something. I think they should do that with research reports. Like, before you open up the research report, you have to, answer these disclaimers. Like, do you understand that these analysts have no idea where earnings are actually going and they have no responsibility? Like, just something like that instead of wasting paper. So compliance and disclaimers that are hard to digest is what I hate about finance.
This is a great sort of lead to where I'm getting at next, which is for some reason very difficult for me to get out of my system today. But when you mention these analyst reports and big name analysts, and you see they come out with a report and then a stock goes up 8%, how is that not insider trading when they can project a price of a share based on being an analyst and then knowing the result that will happen on the average investor? I always find that fascinating. People must know that that's going to go out the day before it goes out. Well,
yeah, and that's why that doesn't really have an impact anymore because, analysts have been so wrong so many times, like investment banks over time, that now, honestly, most of that research is kind of disregarded as like it's good overall to read it, but they don't actually know. It's kind of like garbage in, garbage out. You get one thing wrong on those reports, and it can throw off your whole target price. So it's not really taken that seriously, to be honest. Like, this research on base rate, it's not like investors go, oh my God, Bank of Montreal just came out with a $20 target on ABC Corp, and the stock's trading at 10, so it's definitely going to 20. Like, that's not how it works.
Okay. No, but I think it does for the average investor. They see those reports, and they'll buy based on them.
Well, they should be careful because the institutional investors are not, and those are the ones that have the most money and can move stocks, and they don't buy on those. That's why I think it's kind of dangerous. And those research reports are not supposed to be disseminated outside of the clients. Like, so investment banks send it to the clients, and they're not supposed to go to
Twitter.
Yeah, they're not supposed to go to Twitter.
And how do people, Genevieve Roch-Decter from Grit Capital, how do people find out where the institutional buyers are? Is that something you can find on level 2 and watch end-of-day trading and stuff?
No. So you can look at this holdings, like who holds a particular stock, and you can see, how much of it is held by institutions because they'll be listed if they own big chunks of it. But mostly, no, like the trading is done by the investment banks themselves. So you'll never see the name of an institution because they trade through an investment bank. And oftentimes now they're even trading anonymously or through these dark pools where actually nobody knows who they traded through. It's gotten quite complex.
Well, remind me, for next week, I want you to explain market makers in one of your terms of the week, because a lot of people asking me what a market maker is. Now, let's move on. Genevieve Roch-Decter from Grit Capital is one of the most positive people I've ever met in my life, and she's extremely inspiring. You truly are, and that's why we love to end this segment every single Monday on that positive note and things that you love about finance and finance to love.
Finance to love.
Goldman Sachs.
Whoa!
Well-known investment
How
banks
dare you?
in the world. I know that people have a love-hate relationship with them, but I am really loving them right now because last week they came out with an announcement. They sent around an email to everyone at the company saying they were loosening their dress code and they're going to be allowing people that work there to dress according to the nature of what they think their clients would want. So if, you got younger clients, dress to, a younger kind of attire. So they're loosening up that. And then also they came out with an announcement saying that they want more women on their trading floor. So they're launching a new program that's going to allow females to work on the trading floor and encourage them to work there for a year. And if it doesn't work out, they can then move to another department. So they're really trying to push, the new age, I think. They're very forward-thinking and innovative, and I think more investment banks should follow suit like this.
Well, what's really interesting is I read this article a couple days ago about Goldman Sachs, loosening this dress code and the dress down ability. And I always think to myself, man, I'm far ahead of my time. I wish people invested in me. I've been dressing down forever, done all right. Wearing a ball cap pretty much every day of my life. And I think I've worn a suit, on my wedding day, maybe 2 other times a year. But the part of the reason why they did it, which was interesting, is because they were vying to take Levi's the IPO role.
I didn't read that. So what, they think they want their clients to wear more Levi's?
Yeah, well, it was one of the lead banks on the initial public offering of Levi Strauss, and part of it was for that relaxed traditional dress code. They wanted to show to Levi's that, like, hey, we can present to clients in Levi's as well. So there was kind of a tie into that.
Yeah, well, I encourage anybody listening to go check out this Instagram account called Midtown Uniform. It's a meme account on Instagram, and it shows all these Wall Street guys and how they do dress pretty loosely, but they're obsessed with these Patagonia vests. These Patagonia vests that they wear over their shirts have taken off and are like now kind of a staple, but they're made fun of, and it's really hilarious.
All right. Well, good thing I'm a Canada Goose guy anyway, so I absolutely love it. Well, that's good to know, and very encouraging, obviously, because Bay Street and Wall Street traditionally, Genevieve Roch-Decter, has been a difficult place for women, hasn't it?
It has. Certainly in some regards, and I think it's really encouraging that they're saying women can be out on the trading floor, and the trading floors are not how they used to be. It's not like on Wolf of Wall Street where people are throwing things at each other and screaming. It's not like that anymore. It's really quite silent. It's just people staring at screens, and so. Maybe the smaller boutique firms, there's a bit of kind of the old boys club stuff. I do have friends that are institutional sales, women that are, and, they still comment on things that go on that are like not, probably the most women friendly, but you just fight through it and you know that eventually that stuff won't be around anymore.
Is there? I'm not trying to humanize, this side of business that much, because it can be pretty ruthless. But is there some what's the word I'm looking for? Humility, and almost it is there a way to look at like this toughness through kind of a lens of humor, to go, that's just a role they're playing, but at the end of the day, a lot of these dudes, and I mean dudes, okay, like a real dude culture here, are actually pretty decent human beings?
I think they were at one point. I think the culture, and even like for me, like it's toughened me up over the last 12 years.
Sure.
You become very tough on the outside, but I'm very sweet on the inside. I'm a very sweet person. But makes you into, you have to. You're like competing with bulldogs, and so it's just like a natural survival of the fittest thing. So yeah, I mean, it just breeds that. But I think everybody started out with good intentions. The pitfall that people fall into is they focus too much on the money and they forget like what the passion was that initially drove them to this industry, if they actually had one to begin with.
Well, you gave us that term a few weeks ago, the golden handcuffs.
Yeah, exactly. I mean, don't go into finance if you don't find it fascinating to some degree, because it will eat you alive and you'll be a shallow and like a shell of a person, is what I would say. My
last question for you, is it ever too late to go into finance? I mean, do you hear stories of people going back to become a broker or become a trader, at ages like mine at 45-ish?
Well, if you want to, Todd, you can do that if that's what you're looking for. I can introduce you to some people.
Are there courses I would need to take, or other, how do people get into that?
You just learn from the streets, you have to just hang out at tea and Weimar.
Yeah, you know what? I think I got my backup plan in case this radio career goes to. I almost swore. I'm not swearing anymore on this channel. Yeah, if you're listening, bosses, I got a backup plan. Genevieve Roch-Decter's going to introduce me to the right people.
Awesome. Yeah, no, I will. I'll take you to Weimar school. Yeah.
Yeah, it's by Mark U. Okay.
Yeah.
I love it. Well, listen, Grit Capital is an amazing follow on Instagram, and your Insta stories are bar none to anyone who's doing it in finance, and you really are making it fun and educational, and we appreciate these half-hour segments every single Monday. Come in studio next week so we can film it and get some stuff out there as well in video.
Yeah, let's do that.
Okay, Genevieve Roch-Decter, thanks so much for your time.
All right, rock on.
Appreciate it.
This is the Todd Shapiro Show on Canada Talks, SiriusXM 167.